Crypto treasury companies have taken the market by storm, and that's because they've been raising tens of billions of dollars to buy as much crypto as possible, as fast as possible. At some point though, you start to wonder where all of this money is coming from and who's buying the stocks of these companies. Well, today we look at the largest crypto treasury companies, reveal how much they've raised, where that money came from, and who their largest shareholders are. My name is Nick. Stay tuned. Before we begin, you need to know that I am not a financial advisor and nothing in this video should be considered financial or investment advice. This video is simply intended to inform you about crypto treasury companies. So, if you want more content like this, then hammer those like and subscribe buttons and pound that notification bell too so you don't miss our next video. Now, in case you missed the memo, there's been a surge in companies adding crypto to their balance sheets, and these have become known as Digital Asset Treasury companies, or DATs. Now, you can think of DATs as being an umbrella term that includes Bitcoin treasury companies, Ethereum treasury companies, and so on and so on. As most of you will no doubt know, inflation is why Michael Saylor, then CEO of MicroStrategy, now Strategy, purchased $250 million in BTC in 2020, despite the company having no prior crypto ties. Since then, Saylor has become Bitcoin's most prominent advocate, and Strategy became the world's largest publicly traded Bitcoin holder. This has both strengthened Strategy's reserves and boosted its stock. As a result, many companies have begun adding Bitcoin to their balance sheets, hoping to emulate Strategy's success. And as companies grew more comfortable holding Bitcoin, attention shifted to altcoins. And many turned to Ethereum. Others also opted for Solana, arguably Ethereum's biggest competitor. What's interesting, though, is that companies rarely add crypto gradually. Instead, they buy in bulk, often spending tens or even hundreds of millions of dollars in a single move. Naturally, this raises the question, how do these companies raise so much capital? Well, there are a number of methods, but the most common ones involve issuing new shares, i.e. stock, or offering convertible notes, which can then later be converted into stock. A common method for this is the at-the-market or ATM programs, which let companies issue shares gradually with greater flexibility. ATMs are popular with established DATs, and they scale easily and usually have minimal impact on the stock price. Other funding methods include private investment in public equity, or PIPEs for short, where investors buy shares often at a discount. PIPEs are common for larger strategic capital raises in crypto treasury companies, specifically during reverse takeovers or SPAC mergers. Now, for context, SPAC stands for Special Purpose Acquisition Company, which is essentially a blank check company with no operations, created solely to acquire a private business. Once the acquisition is complete, the company becomes public, bypassing the traditional IPO process. Okay, now that we understand what DATs are and how they're funding themselves, let's start with the biggest category of DATs, Bitcoin treasury companies. When we last reviewed Bitcoin treasury companies in April, there were around 80. Well, that number has nearly doubled to 152. Collectively, these companies hold almost 1 million BTC, or roughly 4.7% of Bitcoin's total supply, which is actually mental. Obviously, the largest is Strategy, currently holding nearly 630,000 BTC, likely more by the time you watch this video. Now, to fund this accumulation, Strategy has raised tens of billions of dollars over the years, mainly via ATM programs and convertible notes. For example, in October 2024, Strategy unveiled its 21-21 plan to raise $42 billion for Bitcoin using $21 billion in equity and $21 billion in fixed income over a 5-year period. But by May 2025, Strategy doubled this to $84 billion after the initial $21 billion equity allocation was fully raised through the ATM programs, turning the 21-21 plan into the 42-42 plan. In any case, what this means is that Strategy raises most of its capital by issuing shares, and that means we can identify the biggest funders by looking at the largest shareholders. Ironically, Vanguard, famously bearish on Bitcoin and even refusing to offer Bitcoin ETFs, holds a 15% stake in Strategy, the largest public BTC holder. Not hypocritical at all. The second largest shareholder is Capital Research and Management with 6% of MSTR stock, followed by Blackrock at 5%. And this ties into the second largest Bitcoin treasury company, which is Mara Holdings, currently holding around 50,000 BTC. Now, Mara's funding is trickier to track for two reasons. First, it gets some of its BTC through its mining operations. And second, most of Mara's funding has been done through a private equity placement, and the details of these investors aren't publicly available. However, JP Morgan and Barclays were the leading book-running managers for Mara's offering of $1 billion in convertible notes last year and could have contributed themselves. In any case, Mara's stock has two major shareholders worth noting: BlackRock with a 15% stake and Vanguard with a 12% stake, the usual suspects. And this relates to the third largest Bitcoin treasury company, which is 21 Capital, led by Strike CEO Jack Mallers. Currently, it holds over 43,000 BTC. Notably, 21 only announced plans to become a Bitcoin treasury company in April, but it's already off to a flying start. The company was formed through a reverse merger with a SPAC sponsored by Cantor Fitzgerald, which got seeded with $3 billion in Bitcoin from its founding partners. The goal was to launch with 42,000 BTC, worth about $4 billion at the time. Tether contributed 24,000 BTC, Bitfinex added 7,000 BTC, and VC firm SoftBank contributed 10,500 BTC. At the time of recording, 21 Capital hasn't begun publicly trading. However, it has filed with the SEC to list under the ticker XXI, so it could go public at any moment. And that actually reminds me, if you're looking to maximize your Bitcoin returns when these companies buy, then you have to check out the Coin Bureau deals page. That's where you will find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. Now, all you need to do is to hit the link in the description or scan this QR code. Once you do that, you will get to the deals page. You'll see all of our offers across a range of different exchange partners. Click one of the Sign Up Now buttons, and that should take you right to the deal we have on offer. Now, these deals will not be around for long, so take advantage of them ASAP by scanning the QR code or hitting the link down in the description below. Back to the video. Now, as mentioned earlier, dozens of businesses have tried to replicate Strategy's approach, and many are moving further down the risk curve in search of greater upside. And of course, the next category of DATs is Ethereum Treasury companies. Rather than accumulating BTC, Ethereum Treasury companies have been stockpiling ETH, and not just for higher potential returns, but also to gain exposure to emerging narratives and use cases like DeFi, tokenized real-world assets, or RWAs, and stablecoins. In recent months, Ethereum treasury companies have grown rapidly with fierce competition. At the time of shooting, there are 71 Ethereum treasury companies, with new ones forming almost daily. Together, they hold 3.7 million ETH, over 3% of ETH's total supply. The largest Ethereum treasury company is Bitmine, which currently holds around 1.5 million ETH. Ironically, Bitmine is a Bitcoin mining company that was founded in 2019 and pivoted to Ethereum in late June this year, raising $250 million via private placement to launch its ETH treasury. Fortunately, the details of this placement were made public. The raise was led by an investment firm called Mosaic and supported by major investors including Peter Thiel's Founders Fund, Pantera Capital, FalconX, Kraken, Galaxy Digital, and Digital Currency Group. In mid-August, Bitmine filed with the SEC revealing plans to raise nearly $25 billion to acquire ungodly amounts of ETH and cement itself in the top spot. Now, Bitmine's largest shareholder was originally Peter Thiel, who held 9.1% of the company's outstanding shares. However, due to share dilution, meaning more shares were issued and sold, Thiel's stake has fallen to 4.65%, and he is now Bitmine's second largest shareholder. Cathie Wood's ARK Invest has since taken the crown from Peter, with the asset manager holding around 5% of Bitmine's shares. And this ties into the second largest Ethereum Treasury company, which is SharpLink Gaming. It currently holds nearly 730,000 ETH. Originally a sports betting and online casino marketing company, SharpLink announced in May this year that it would raise $425 million via private placement equity to become an Ethereum Treasury company. SharpLink made headlines in crypto because Joseph Lubin was revealed to be the chairman of its board. Now, for those unaware, Lubin is an Ethereum co-founder and also co-founded Consensus, which created the widely popular MetaMask wallet. Soon after the initial $425 million raise, SharpLink announced plans to raise another $1 billion to buy ETH. In July, though, the company expanded this plan to a hefty $6 billion. Interestingly, this fundraising has been led by Consensus, with major contributions from top crypto venture capital firms and infrastructure partners. Notable backers include Parify Capital, Electric Capital, Arrington Capital, Galaxy Digital, Ondo Finance, Hypersphere, and even SharpLink's own CEO, Rob Pythian. SharpLink's largest shareholder is Jane Street Global Trading, holding 3.5% of SBET shares. Parify Capital is second with 3.3%. And Marshall Wace is third at just under 2%. Moving on, the third largest Ethereum Treasury company is the Ether Machine. It currently holds over 345,000 ETH, and it was created in July this year when the Ether Reserve merged with Dynamics Corporation, alongside a plan to launch a $1.5 billion ETH yield fund, which leverages DeFi and staking for additional revenue. The Ether Machine exceeded its $1.5 billion target after raising over $800 million in upsized stock financing from Pantera Capital, Kraken, Electric Capital, and Archetype. To surpass this target, co-founder Andrew Keys contributed an additional $645 million as an anchor investment. Talk about deep pockets. Anyways, the Ether Machine plans to launch with over 400,000 ETH in reserve via a merger with a blank check SPAC company, Dynamics Corporation. It aims to trade publicly under the ticker ETHM by Q4, replacing the current Dynamics ticker DYNX. According to them, the goal for the Ether Machine is to have, quote, one of the largest on-chain ETH positions. Oh, and by the way, you can learn more about Ethereum Treasury companies by checking out our video on that right over here. Now, while many companies have added BTC or ETH to their reserves, some DATs have gone even further out along the risk curve. Besides Bitcoin and Ethereum Treasury companies, Solana Treasury companies have emerged as the most popular. While a definitive list of Solana Treasury companies hasn't been compiled, our research identified at least 7 with active SOL reserves and 2 more currently raising funds. Collectively, the 7 established Solana DATs hold just under 4 million SOL. At the time of shooting, the largest Solana Treasury company is Upexi, holding just over 2 million SOL. Upexi's first $100 million raise in April this year included backers like Delta Blockchain Fund, Delphi Ventures, Hivemind, Borderless, White Star Capital, and Arthur Hayes, who was recently added to Upexi's advisory committee. The company has since announced multiple funding rounds, mostly in July. The first aimed to raise $200 million via private placement and convertible notes, but closed slightly short at $150 million. In the following weeks, Upexi announced a $500 million equity agreement with Alliance Global Partners, bringing the total raised to over $750 million. Upexi's largest shareholder is Asset Management, holding 24% of the shares. Other notable investors include Attestor Limited, Cathmere Capital Management, Pantera Capital, Vanguard, and Cantor Fitzgerald, to name but just a few. And this ties into the second largest Solana Treasury company, which is DeFi Development Corp., formerly Janova, which was acquired by Kraken executives and repurposed as a DAT in April. It currently holds over 1.4 million SOL. With the announcement of its acquisition, Janova revealed it had raised $42 million through convertible notes. Key participants included Kraken, obviously, Pantera Capital, Arrington Capital, Protagonist, and Third Party Ventures, among others. In late April this year, the rebranded company filed with the SEC to raise $1 billion for SOL accumulation. In early July, the company completed an upsized $112 million convertible note sale, followed later in the month by 2 more successful raises of $19 million and $20 million, totaling just over $150 million for the entire raise. DeFi Development is the largest shareholder of its own stock, holding about 13%, with CEO Joseph Onorati as the second largest shareholder at 10%. Other notable shareholders include Pantera Capital, Vanguard, and even BlackRock. Classic. Now, this relates to the third largest Solana treasury company, which is Sol Strategies. It currently holds over 420,000 SOL. Notably, Sol Strategies was previously known as Cypherpunk Holdings, but rebranded to Sol Strategies late last year. Between October last year and April this year, Sol Strategies raised around $550 million through multiple rounds. And this included a $500 million convertible note in April with just one investor, ATW Partners, which is set to receive a portion of stake-in rewards on staked SOL. The company actually also sold some of its Bitcoin to accumulate more SOL back in October. And the largest shareholder of Sol Strategies is the company's chair and director, Anantas Guaga, who currently holds 17% of its HODL shares. Nice ticker. The next 5 largest shareholders are also company insiders, though each hold significantly smaller stakes. Other notable investors include BetaShares Capital, Invesco Capital, and VanEck. Okay, now that we've seen the biggest DATs for Bitcoin, Ethereum, and Solana, you might wonder if the trail stops there. The short answer is no. DATs are rapidly emerging for other altcoins too. For instance, several XRP treasury companies are emerging, including Vivo Power, which is taking an interesting approach. Instead of buying XRP directly, it plans to spend $100 million on Ripple Labs shares, thereby gaining indirect exposure to XRP. When announced in early August, a $100 million investment meant exposure to roughly 211 million XRP, valued at just under $700 million, working out to an 86% discount. To fund this, it raised $121 million via private placement. Remarkably, $100 million came from a Saudi prince, who also serves as chairman of 11th Holding Company. The largest shareholder of Vivo Powers is AWN Holdings, with over 8% of its shares. However, the company has heavily diluted its stock over the past year. AWN previously held more than 20%. Other major investors include UBS Asset Management, JP Morgan, Citigroup, and Morgan Stanley. Meanwhile, another crypto being added to corporate treasuries is BNB, and the largest in this niche is a Canadian vape company called CEA Industries, which pivoted to a BNB treasury strategy in August this year. The company rebranded as BNB Network Company and changed its ticker from VAPE to BNC. BNB Network Company currently holds 288,888 BNB, with the goal of owning 1% of the total supply. The company also recently announced a $500 million private placement. And what's crazy is that this funding round was led by YZI Labs, which is tied to Binance's co-founder CZ. Following the news, BNC's share price surged 550%. BNB Network Company's largest shareholder is Murchison Limited at 3%. Other notable investors include Modera Wealth Management, Shea Capital, and Bank of America. And believe it or not, but some companies are even starting to accumulate Dogecoin. One example is BitOrigin, a former Chinese pork processor turned Bitcoin miner, an unusual combination to say the least. It currently holds over 70 million Doge. In July, BitOrigin agreed to raise $500 million, $400 million in shares, and $100 million in convertible debt. The largest shareholder of BitOrigin is board chairman, CEO, and COO Jiangyang Jiang, though these have been heavily diluted. Other investors include UBS Asset Management and Two Sigma Securities. And of course, this is just the tip of the iceberg. We're seeing other DATs spring up for altcoins, including Tron, Litecoin, Sui, Hyperliquid, and Potential, and many, many more. So then, what does this mean for the crypto market? Well, the rise of DATs is clearly bullish for their respective cryptos, especially those with multiple dedicated treasuries. What's fascinating, though, is that many DATs are being funded by crypto institutions, while their shares seem to be mostly held by TradFi giants, specifically asset managers like Blackrock and Vanguard. Before you get too excited, it's important to remember that asset managers merely manage money for their clients. It's literally in the name. Similarly, it seems that many DATs for altcoins are designed to basically bypass the need for filing an ETF. After all, the primary reason why investors purchased strategy stock back in the day was because it essentially offered them exposure to actual BTC. And this made strategy function as a de facto spot Bitcoin ETF before the US spot ETFs were launched in early 2024. It's possible we're seeing the same thing now, particularly for DATs focused on altcoins. If this is the case, though, then it doesn't paint a very promising picture, because it seems that many of these altcoin treasury companies have struggled to raise the amount of capital they want. At the very least, it's taken them a lot longer than Bitcoin treasury companies to raise it. And this could be reflective of a relative lack of interest in altcoins at this stage in the cycle. Or it could be a sign that both crypto institutions and TradFi investors are hesitant to give these companies the capital they need to invest so far down the risk curve. On that note, it's important to note that these companies do carry risk. As Ethereum creator Vitalik Buterin warned, DATs could become over-leveraged if they mismanage their treasuries. A significant crypto price drop could trigger forced liquidations, further driving down prices. The caveat is that the most bullish part of the cycle seems to be ahead of us rather than behind us. As crypto prices climb, these companies' assets will rise, attracting more investors and increasing funds flowing into these treasury assets. And this is going to be very bullish for the cryptos being accumulated by the DATs. So watch this space, because digital asset treasuries might be the very rocket fuel your altcoin needs. Now, if you want to learn more about Bitcoin treasury companies, check out our video on that right over here. And if you are not subscribed to the channel, well, why not? You can do that right over here. This is Nick signing off. Thank you guys very much for watching, and I will see you in the next video.